What's good? I'm gonna give everybody a second to get in here. I have this Tesla chart up. Somebody in stock chat had asked me to look at it. It's not really showing much strength here, but if it was gonna reverse, it would be right around here. Although many times when we come into that initial target, which I'd given the 206 target, we were up in this range right here. Let me find the message. Yeah, so this is the 10th. I said 206. It was when we were a little farther down. That's right. We'd been talking at this level for a while. Back in, where is it going to be? Notes. Where was it? It's Apple. Where is this Tesla TA? So I enjoy watching Tesla because I don't trade it at all. Oh yeah, here it is. This is whenever we had came down here. We had wanted it to come back down to this imbalance and bounce back up, but it never took the weekly imbalance that I wanted it to tap into. That's kind of where we're at right here. We're at front ran it. So, who knows? Maybe it's saving it for later. I wouldn't bet the farm on it, but this was the weekly imbalance I was referring to. A lot of equal highs in front of it. I mean, I'm sure at some point in time that'll get revisited, but I wouldn't look at that as a draw. If I'm on the weekly chart, if the daily starts to show signs that it wants to reverse, all I really would do to get the low-hanging fruit would be just target this nice gap right at a equilibrium, and that's on the weekly chart. Now on the daily chart, if we start to draw up, which we wanted to, but really the way we close today is going to be indicative of whether we're ready to bounce or not. Just because we took the sell side and hit that target we had at 206 doesn't necessarily mean that it's going to reverse right here. I do like the area it's at, though. Let me go for ES. This was the original draw that I wanted us to meet, was down here in this imbalance. Now, I'm not going to trade it right now because it's lunchtime, but and also there's not really an entry the way that I would want to enter. But I do like where we're at. If we're going to bounce, I think it's a good chance that we bounce here. Why is TradingView doing this? It's just so annoying. It's like when I go to one time frame and extend something all the way left. It's been doing that a lot lately. But anyways, the reason I picked this was because this new range we had created after that massive move, I didn't even know. Apparently yesterday was the third biggest move in SPY history in a single day. It's pretty crazy. But I just look at this as when I was coming into the market this morning, I wasn't really interested in playing the raid that occurred right around this area. I mean, you can see it was very short-lived. And the reason for that, again, is just understanding ranges. And I look at this as, we had kind of made this range. We took out some of this external liquidity of the old range, which was this. So now I would look for a reversion back to a premium or a discount. And that's exactly what we did. You just draw the first price delivery array at a discount and wait to see what price does there. So far, so good. Like I said, I won't trade it. If this is the move, I'll miss it. It's whatever. I got to follow my rules of not trading during lunch. But I would like to see some kind of sell side raid after 1:30. We went over how to catch that and the way I do it, my version of it in the Discord yesterday. But look for that ICT setup coming out of the lunch hour. So if we do get a nice buy, I personally am just going to take a 2-hour fixed trade just because I've been. Look at this. Why is this doing this? I don't get it. But personally, I'm just going to take a fixed 2-hour trade. The overall draw for me, when I'm looking at a more local range, would be to kind of measure this impulse move we had. And I'm going to start it from here and move down, not from up here. That's just the way I do it because I see the true impulse coming in here. This is where the equity open happen. Institutional sponsorship, in my opinion, is more prevalent there because you see it kind of mosey down, took liquidity, right? Mitigated this fair value gap. That's where I see the value at. So I'm going to, like I was saying yesterday, you want to focus on where the meat on the bone is, so to speak. And then I'm just going to look at the first price delivery I see in a premium. So on the 15-minute, we have this massive fair value gap. And what I like to do whenever we have something like that is either just look right at a premium, make that your draw or overall target. We know it's not the draw because it's just the equilibrium, but you can go into a 5-minute and kind of break that fair value gap down and see where the real imbalance is. Go to a 3-minute, you see the same thing there on a 3-minute. The 1 minute, there's also a clean high right there. So I like that area if we do start to reverse. And I'm not necessarily, you don't have to always catch the bottom. Like, let's just say, and this is just total speculation for educational purpose, let's just say price does this during the lunch hour and gives that nice entry and I miss it. And then it's just hanging out, comes 130. Let's say it takes out all these lows, gives me my entry model. Like, I'm still going to take that there. And that's just an example of, building the narrative, that if price shows the desire to go higher at the right time, then I'm going to say, okay, well, we're going to revert back to at least a premium of this little impulse move. Who knows? We could go even higher, but I'm just looking at, low hanging fruit. We don't have to catch, min maxing with trading. It will drive you crazy. It will. And don't fall into the marketing ploys of all these people that get 85R every week. They'd be rich as hell. But we just build trades around that narrative. Now, this is, again, don't come back if the market dumps and say, oh, you said it was going to go here. I'm not saying that, well, there's no indication for me or I would be involved. And yes, there's a little bit of a shift right here. But remember, what time is it happening at? Because time is just important as price action. In your day trading, time should be more important. Well, I wouldn't say more, actually. That's a little ridiculous. Just as important as price action. So I said, what was my approach to risk management when I was doing the funded challenge? For phase 1, I risked 1%, and I got pretty blessed. I was down a little bit when I started, but then I got like a pretty crazy Bitcoin trade that basically rode me to Valhalla. But for phase 2, I risked 0.5%, and it was fine too. It was a little slower, even though it was less of a gain. It took me longer because I was risking 0.5%. What you could do is, see, that's why I didn't want to take that, because this is what you'll get whenever it's the lunch hour. But you'll, as long as you don't just try to start risking more as you lose because you feel the pressure of the challenge, you'll be fine. One strategy that I like is, let's say if you risk 1% of your port, well, if your account falls into a drawdown, even the smallest bit, you cut that risk to 0.5%. So basically just cut your risk in half if you're in a drawdown. You can apply the same thing for like your weekly P&L or, your overall port if you're basically starting the challenge. But I think it's a good way to like a safeguard, because we know that, especially even if we're good traders, we're going to take losses. And sometimes those losses come with psychological baggage that will then further influence other trades and cause you to maybe take a couple more losses. So if you get into that, that bad swing of things, it's a lot better to have less money out on the table than to be, risking the same you were at the start. So that would be the best I would recommend. Yeah, now if the S&P does just blast through all this, then okay, he's 88 limits hit. Alert. But if the S&P does start to just blast to the downside, which it definitely can, and doesn't give us an entry, that's fine. I don't care to not take an entry on indices today. I've just been hanging out this morning, kind of doing some stuff around the house. So, don't force anything, but that's what I would like to see. So look at the test on the monthly. On log since the beginning. I haven't done log in forever. Take a giant market maker sell model or something. No, I'm just kidding. I mean, yeah, it doesn't look great, does it? Jesus, that's fucked up to look at in the log. You don't realize what these numbers are. $20. Like if I was just looking at this chart, I don't even know what this. Oh, this is back whenever before they did their splits. I was like, what is this? You know, just looking at this, like if I wasn't, you know, if I didn't know what it was, and I didn't know what time frame it was, I mean, I would say this is probably gonna. Wait, what the fuck? Oh yeah, I forget. So that's why I hate log. Oh, I mean, to be fair, then it's if I'm looking at it like this, then you know, I think the overall like sweet spot target will be at that 180 mark down there. Imbalance just below it. You can go ahead and drag these equal lows down. We're actually just talking about the test when I post this. What's oil doing today? Damn, oil looks good. I won't even hold you. I mean, you could use a couple more days of downside, but overall, I mean, this would be like the draw right now that I see. What I'm setting that alert for is once we come back down into that fair value gap, I would look at the 1 hour chart. And if I can get a decent market structure shift, the same exact framework right here, we have that liquidity raid, market structure shift. So you've got both, you know, your, oops, wrong template. Kind of got both boxes checked. You draw a fib on the impulse move, and then you have your fair value gap. It's the same model we use for indices. But now we want to take it a little step further. So, you know, as price comes into this zone in the 1 hour, I want to see that same thing. And you can see right here where people got faked out real nicely. And it front ran, engineered a lot of liquidity right here. And this is the great example of, yes, you can get a market structure shift and it doesn't really mean anything as far as what you're trying to do if it's not in the right context, because all a market structure shift is doing is telling us the market wants higher. But we have to ask ourselves, why does it want higher? Well, in this situation, it wants higher to mitigate this imbalance. So it has enough fuel and buy side liquidity for market makers to take price down here. That's the context of why that market structure shift happened. Now, plot twist, when it's down here, and if it gives that market structure shift, we would look at it in the context that why is it doing it? Well, there are probably orders here because we're in a bullish daily impulse move and we've came down to a discount. And now this could potentially be reaching for buy side liquidity, right? All these highs. And you don't have to even take it that far. And that's the benefit of using lower time frame charts. Like let's just say you get this in the 1 hour and then price comes into your fair value gap. Well, then you can go on the 5 minute, wait for that same thing. And you can make just as much off of, you know, maybe a move somewhere down in here you got in that you just take to this high or something, right? I mean, it's going to be skewed because I'm drawing it, but you guys know the power of using the lower time frames for execution. EU provided a really nice trade this morning, like really early though. Actually, it was at 7. Never mind, I thought it was a little earlier. So it was a very nice trade. And this is a good example of that, right? We had a hourly market structure shift. And we just look at the impulse move that shot us down there. You could have said, okay, bam, here's that. Your first little area. I'll go down to a lower time frame. Our first area in a premium, which is going to be those relatively equal highs. Now, if you could have used the 1 minute to maybe frame an entry around that, say we came down here, the first swing high you really violated is right there. You could draw this. It looks like it took that low, and this is a great example of why I always use the low, like the actual low, from using low time frames for stop losses. The way I would have probably entered this would have been like right here, stop loss under this, and I would have just done a fixed 2R. And you could have taken it way higher, but that's a great example. I mean, this is hindsight. I didn't take this. I wasn't even at my desk, but that's a good example of how you can kind of layer those confirmations through different time frames to capitalize off of a narrative without having to be a part of the entire move. And even though you confirm and this and that, nothing is for sure 100% of the time. You're going to take losses every week. You're going to take losses. If you don't, then you're just a god trader, right? And it's just not true. But so that's another question I've got is, somebody sends me something and they've been learning about SMC, and I think that people kind of like misunderstand and think that it's like the Holy Grail to where like you've cracked the scientific code and you'll never be wrong. And that's just not the case. And having that expectation is going to breed a lot of psychological issues that are going to be hard to shake. So we actually just asked a really good question. Hey, do I ever use volume or footprint cluster to add confluence or to better time entries? I personally don't, but it's something that's interested me in the past. I know a couple people that I talk to quite regularly are doing that. So I'm kind of just going to let them do it and see how it works. And I'm a big believer of, if you have something that's working, don't try to like go out and fix it. You know what I mean? Because there's been a lot of times in my trading career where I just, you're always looking for something more, so to speak. And if you do that all the time, you're going to end up causing yourself problems you really didn't even need to have. It's a saying we have here in the States: if it's not broken, don't fix it. I'm not saying not to try to improve yourself or you as a trader, but if you have something that is profitable as far as technical analysis goes, then I don't see the reason to always like try to find more, right? I think once you have a profitable model, which everybody does at this point, there's so much stuff on the internet. I've went over a ton of stuff, especially if you're in the private server, you've got quite a few different models. Once you know that it works and you've back tested it, it's really just about working on yourself. And the technical part's easy, but I'd say 90% of the people that I know that are struggling as traders are struggling with psychology issues, whether they realize it or not. They might think it's not, but a lot of times that's what it is. If a fair value gap straddles the premium discount line, would you say it's valid when it hits on the correct side of the premium discount for the move, or look for the next entirely contained in either premium or discount? I just look for the first one. I'll even take it if it's under. And that's just me. I'm all about low-hanging fruit. I think that it's just a better strategy. Like, for instance, let me try to see if I can find something. Okay, here's a good example. Let's just say if I was in a short, well, hold on. That's actually going to be skewed. I'll just use this as an example. So we're going to play a little bit of make-believe. We'll say that Price had given us an entry model. We're just kind of imagining. And, I'm in a short. And if I was looking, what's the overall last area I'm out, I would just look at this little whole zone right there. So, in like a 10 minutes, it's going to be an order block. And even though it's at a, technically still at a premium, this is where I would be fully out, probably much before then. But when you're trading counter trend or looking for a draw on liquidity, I think it's all about like, what's the next step, not what's the final min max target where it's going to, you pinpoint it to the last pip, but I would always look right around equilibrium, because there is no, price does not have to come back to a discount. You can hit that and then just rail, right? Especially if the higher time frames are pulling it in that narrative as well. Oh, I read it for a second. I was like, what? But yeah, no, exactly. That's how people act, though. People act like you learn to trade and you just, you're never going to be wrong again. Or like whenever you say you kind of get on a good beginner's luck streak and then you start to take those losses, you're like, this is bullshit. This is a scam. But it's like, dude, you're going to lose a lot. Like if you're trading for a career, you're going to lose an insane amount over your career. I promise. If you don't, like, please hit me up and let me learn your ways. For instance, even with a low risk to reward strategy like a 2R, you only have to win 40% of the time to be profitable. It means you can, theoretically, statistically lose more than you win and still be profitable. Some of these other guys that have the high R strategies, if they follow their strategy and it works to a T, then they're able to even lose more than that, which I don't really condone that or recommend it just because of the psychological effects it has. But yeah. Yes, I've been doing a fixed risk to reward recently. Not for very long. I mean, this past week, I've literally taken, I think, 4 trades, and I've been doing a fixed 2R. It's honestly it's like very easy. Sometimes it's like, like there was a couple trades I looked at that were like, damn, like I really took that one too early. I think I hid most of them. We did a class yesterday and I used this chart. Yeah, this is it. This is one I was like, wow, like, for a second I was like, this is why you shouldn't do that, And I mean, you could say that because like the thing was, I literally was targeting lower. Like I wanted lower than this, but I just did a fixed 2R. And then there was another one over here as well. So it was like 2 days in a row. Or actually, this is the same day, I think. What was the dates? Yeah, this is the same day. So it was a morning sell and then an afternoon sell. And, both trades would have went much farther. But I kind of like the idea of just, you take a fixed 2R and I'll see how it goes. Now, if I see this happening all the time, then I'll probably cut it. But I also, there's one trade that I didn't take. It was this morning. I didn't take it, but it was a good example of why the 2R can be clean. Like for instance, when we had this first initial run right here, behind this, you had this market structure shift right here. Price came back very quickly right into this fair value gap. Barely tagged it in. On this example, this would have been a great place to do a fixed 2R. Because, right here, the reason I didn't trade it was because I wanted this imbalance right here. That was the only reason. I had a feeling it was going to go higher. But looking back, I'm like, damn, I could have utilized my strategy. I could have done a fixed 2R because, where would I have wanted to be all the way out at? This imbalance, for sure, like the base of it. If even that, if I wasn't using a fixed 2R. But I could also see, you look at it from, okay, well, the impulse move of the morning, which at that time was this right here. You would look, okay, well, I'm going to, take it up to here. And then it does this, and you're like, oh, it's just coming back to break even to mitigate this fair value gap. I'm good. And then you get shit on. But the reason that would have happened was just the draw on liquidity was very clearly lower. And again, it all comes back to understanding ranges. A lot of people, especially people that are new to this with just the 2022 ICT stuff, I don't think that there's a good enough explanation of ranges. And what I've seen, I haven't finished it all the way. I've watched probably like the first half of it. But I recommend to a lot of people, if you just have watched that, try to get your hands on some of the 2016 stuff. It's a lot more in depth. And I think it was really complicated. So I think that his goal was to try to simplify it. And it's a great info, the 2022. I'm not saying it's not, but there is some stuff that I think is is left out. Oh, what's up, Zamir? I see you in the comments. What's up, Zero? Oh man, I'm fucking sleepy today. Yeah, coming out of the lunch hour, I'll watch for a 5-minute low to get taken. I probably wouldn't sell anything here, just even if the sell opportunity does arise. I just not really feeling it. I may regret it, may not, but showing a little desire to move higher here. Nothing really insane. Most likely will, if I had to guess, come back up into this imbalance and maybe even make a new low. Any tips with being more disciplined with overtrading? Yeah, for sure. I mean, really just come up with a system. Here, you know what? I'll share you guys something. 1 second. I'm trying to figure out how to get this on my computer screen the quickest. So here's some free game for you guys. Let me send this to myself on Discord or send it to, and I'll put it on the screen. And what I'm going to share with you guys is just this little notes document that I read every day before I trade. Oh, it's way too large. How's it way too large? I'll already post. Well, I'll just do it like this. So here's the first set. I just trade NQ, ES, and Bitcoin, and this is for my funded. I do have a little Binance that I will take trades on futures, but it's more of like a personal account, and I that's where I give signals from. I just don't like giving signals that I'm not also in. No trading on weekends or NFP FOMC days. Trading hours 8:30 to 11, 1 p.m. to 3 p.m. If there's high impact news in either time window, I wait till it's over. I only trade liquidity raids, basically, daily, 4 hour, 1 hour, or 15-minute area of liquidity has to get rated to give me a framework. Always double check my orders because, believe it or not, I have done some really dumb shit, especially MetaTrader. Never exit or a trade or cancel limits till it has been stopped or the targets have been met. And this was one that it was actually quite recently. I shared it on stream. I don't know how many of you guys were here, but it was sad. It was literally like a trade, front ran my limits, and I was like, fuck, I'm canceling it. Then it came back to my limits and went instantly, like 4 hour and like 2 1-minute candles. So that was a lesson learned that the narrative, if it hasn't played out, don't sit it out. Trim 50% if you're moving into the lunch. And this is one that's a little bit of discretion for me. Remember, these are for me. For instance, if I'm barely in profit with a trade that I entered at 11:15, I probably won't trim moving into lunch. But if I'm in a trade that, I got in at 10 a.m. or 10:30 that's in decent profits, I'll trim some off of it before moving to the lunch, because the lunch will be pretty inefficient. Zero asked why 7:30 and not 8:30. Oh yeah, player, I did take off ETH because the TP hit. It says it right there. You have to. We took a trade on ETH, and then I canceled the limits, but it was just because the full target hit. So, but for 8:30 for indices is like a player said, that's when you're going to see more of the bank open. But that's banks are trading before that, but it's just where I see value. just 7 a.m. would be more for like Forex. If you're trading like Forex dollar pairs, then yeah, watch at 7 a.m. But this is more because remember, I'm just trading indices and Bitcoin, which is basically like indices' ugly stepchild. 3 p.m. I always will break even stops. Now it says no break even stops on indices. This is before, like 3 p.m. or like, let's just say I'm in a trade. We've went over this a lot recently. If you're in a trade that hasn't hit your target and it's still close, don't get scared and break even your stops. That's why I said they can't see it very good. Damn. Yeah, I can share it on Twitter. I don't know. I don't know why it's not good. It should be good. I do this. I don't know. But 4 p.m. I close in full. I don't swing anything on my funded account. I'm just done, no matter where it's at. Usually I'm out much before then, to be honest. Zamir, for euro dollar, really 2 a.m. Eastern time, like 2 a.m. New York time, is where you want to be active with euro dollar, in my opinion. 2 losses in a day. This is kind of to answer the question. I know we went on a tangent from this, but I figured this would help some of you. If I have 2 losses in a day, I stop trading. Now, this doesn't matter if I'm up 5. Like if I take 5 wins, which I don't really trade that much. Let's say I take 3 trades and they're all winners, and then I lose twice. That's still 2 losses. So I'm done at that point. And then no break-even stops on indices. That's more for, like I said, whenever you're pretty early in the trade and you don't want to get scared and do something stupid. Nice little reaction here. Yeah, I mean, if this was playing out after lunch, I would probably take a trade. I'll still paper trade it. Do not go trade this and blame me if you take a loss, because like I said earlier, time and price is important, but this is the kind of price action. Just to give you guys an example, this is, if it was the right time, something I would look for, but it's not, so it's automatically lower probability. This is a good example of, let's just say it plays out. So I said, oh, why didn't you take it? Well, the odds were in that trade's favor, but the odds for me automatically decrease when we're in this lunch hour. So every trade and every model has odds. You have your percentage of how much it works and how much it doesn't. Those odds automatically decrease in your favor if you're trading at the wrong time. But just so you can see, this is the kind of price action I would want to see after 130. But I don't think this will hold. I think this will probably get ran. But just to show you guys what that would look like. We'll see. I'll just hide it. I don't want some demons to join like midstream and just, oh, look, longs. He's calling longs. Oh, there's a bunch of stuff. Somebody said, how many years trading? Full time, like 2.5. But overall, I've dabbled in markets since like 2014, but never like really seriously intraday trading or anything like that. I thought I was a day trader. Thanks for sharing. Yeah, no problem. Oh yeah. So banks. So okay. So to clear that up, banks are entering at 7. Banks worldwide are entering during London session. It's not necessarily about when the banks are entering, right? The New York session by ICT, for Forex starts 7 a.m. New York time. You're not wrong. I just don't trade at then. Sometimes I look back in the morning like, okay, it was a good entry. But most of the good pre-market entries, in my opinion, happen around 8 to 8:30 if there are good pre-market entries. That's just my opinion. But that, if you have something different, it works for you, then don't let me, sway that. So he said silver and also asked about Bitcoin. I have not gone over Bitcoin. Yeah, see, look at that. Nice little reaction off that gap. Silver. We'll do silver first. I think I was looking at this recently. And it didn't look too hot. Jesus Christ. Let's go ahead and mark this chart up. Yeah, this is an interesting one. If I go to the monthly, I think you'll probably trade down into this 1667. So I said, at what time? What about crypto? Where is it? What time? Or about what time? Sorry, my shit's lagging. About what about crypto? At what time do I look for setups? Same with indices. And really for crypto, I don't. But I'll trade during the Asian session. I'm more trading like the 15-minute for entries on crypto than I am like trading like intraday. I just think it's a waste of time to trade intraday. Complete waste of time. Yeah, like he said, ZP. I really encourage people to please don't only trade crypto. It's just you're wasting your talent and your time. But gold overall, I think, is drawing down. So I would say this monthly candle, we've still got 17 days. I think this monthly candle has a lot of potential to reach this number. We also already had kind of our monthly power of 3. We had the first 2 weeks. First week, big push up. With October, we took out. Now, remember, we talked about power of 3. The whole concept is the open, high, low, close. So, for instance, if we make the open right here, then we go up, we try to make the monthly high. Or why is it likely that's going to be the high? Because we have equal highs right here. Price takes that liquidity. Now we're expanding towards a true narrative. So then we'll probably come back down somewhere into here and bounce up, and then you'll have that close, and this will be your bottom wick. So the candle would look on the monthly something like this. Get rid of this. See what I mean? Now, this is all speculation, but this is what I think the draw on liquidity is, that monthly order block. And now it's ugly, but you guys get it. That's kind of just how you can use that same ideology, because all we're looking at is accumulation, manipulation, distribution. That's all the market's ever doing. And you can basically use the lower time frames to kind of build as building blocks to the higher time frame candle. So if I think this higher time frame candle is going to be a fat wick down into this and it's going to bounce, I can actually try to layer that through the weekly chart. And oftentimes you're going to see that false move before the true move, which is what exactly we saw here. Pushed up above equal highs, massive rejection. Smart money sold to all these buyers. So on the daily chart, we've got very clear areas of liquidity we're running for. And now this is something where somebody could get mixed up and say, oh, well, the daily range is bullish. Right, but remember, what's the daily range operating within? The context of the weekly range. Right. Well, the weekly range is pretty clearly bearish, but what's that operating within? The monthly. So what do we think the monthly's doing? Right. Is the monthly really showing any desire so far to hold this fair value gap? Or this massive... Jesus, I gotta fix that. Oh, that didn't fix it. Anyways, you guys get the point. This probably will. I can draw another one. But we did not hold this massive fair value gap. Price came into it. It's not really indicative that this is where we're going to reverse. So I look for the next clear area of institutional sponsorship, which is this order block. Very key level here. Maybe not the very top. I'm not saying we're going to pip it and then run to the moon, but I do think that if, silver has any hope for any kind of short-term rally, it'll be here. And the reason is, if you look what that candle did, it took out liquidity over how many years? 4 or 5 years worth of liquidity. And it was, oh, it's the COVID candle. Of course, should have known better. So we look, price, was traveling. Where was it traveling? The last recession was the 08 candle, right? Not the, I shouldn't say the 08 candle, a candle during that market crash. The COVID candle was, we all know it's just 1 month, and then it was money printers go on. But with the monthly chart, I really focus on order blocks. So for instance, I would have looked over here. You see that's where we bounced off of, and I use the largest volume candle. So like between these two, I'm going to look at the one that has the bigger body. Same with these two, I'm going to look at that one. Same with these two, I'm going to look at this one on the lower candle. You could maybe try to look at this, but that had already been traded all through. But this candle took a lot of liquidity, so it's going to be a very pivotal area where we should see some form of relief. But even though I'm looking at it in that context, I'm not going to just set a buy there or start to have a bullish narrative there. I need the candles to tell me that. So for instance, let's just say we get out in here, and then that's the weekly view. Then the daily starts to do this. Okay, well, that's going to tell me this weekly range might start to get retraced, whatever we formed at that point. And again, that's why I think it's really important. Drawing liquidity is better than trying to say, like this is what Wyckoff will have people doing. They'll be like, okay, we're going to go here, here, and we're going to come up, clean out all these highs. We're going to go to a distribution schematic, and then we're going to go for the liquidity. It's just like, you don't need to know any of that. You don't. That's just going to create a lot of problems for you, because you're going to have a narrative that you want to impose on the market. And you got to be right at that point. You've put so much time into it, and like you have built a story that is like, it's real to you. It's going to happen. But that's a dangerous road to go down, because then you start to force that and impose that. Somebody said, there's a couple. Was thinking about it. Did I notice that too on the high time frame, price usually rejects from OBs without taking buy side or sell side before? Yeah, on the monthly charts, you'll see a lot of times. I mean, even in this example, it did take the buy side. Like for instance, price traveled into the order block, make reaction, just come down and rebalance, then price took that liquidity. And then at that point, then you had this range where you need to come into a discount. At that point, once we take the external liquidity, then where are we going? We have to go back down. Well, I shouldn't say we have to, but we're likely to go back down to a discount. That's exactly what price did. It took a while. It took years, actually. Well, not years, but like a year and a half, but it did. But I think overall in gold or silver, as next stop is that 1667. And that's on Awanda is the feed. Bitcoin is what we'll go over next. Nice reaction so far. Although with corn, I almost think it wants to go lower. We'll see. It might take a little while, but I mean, I wouldn't be surprised if it doesn't. When I look at this big impulse move we've had, here's the main imbalance. I would look at it, go to 15-minute and try to refine that. Got an unmitigated imbalance with equal lows. So I think overall that would be the draw. But, with Bitcoin, we have to take into account that we did just, I don't know, because it did feel this imbalance. Interesting. So what I was going to say is we have to take into account that it took this low right here, and the 15-minute gave us that market structural shift all the way down here. That showed the desire that it wanted to go higher, and it did. It went into that daily imbalance. So, there's no golden rule that says we have to come back into here. That's originally where I wanted us to push. But, if you see this kind of price action with Bitcoin, and we came into the other drawn liquidity, which is that daily imbalance, and then what happened? Structure shift. So now price at this point seems like overall it wants to move down because the daily chart, we're using, man, fuck trading view, dude. Let me get this shit together. We came up into this order block and this imbalance, and the 15 minutes showing the desire to go down. It's a Friday too, so it's going to be weird over the weekend. Overall, I really wanted us to come up here. Like really, really wanted us to come up here. It's just too clean. But you have to take that into account. So what I would look at here, maybe a little bit of a move up into this imbalance. I mean, Bitcoin kind of has a mind of its own. I personally like alts here better than Bitcoin as far as longs. I mean, we're reacting nice to this imbalance, right? But it's not in a discount. So to me, it's not really the highest probability. But I mean, I've seen Bitcoin do this and just off to the races. If I were to want to be a buyer in Bitcoin, I would need the low time frames to come down into this area. And that's where I'd want to see some kind of indicative price action that we do want to go higher. How many assets trade example per day? To be honest, I really mainly focus on one. I trade Bitcoin, NQ, and ES, but like lately, I've just been watching ES. I just like the way it's moving better lately, and so I'm sticking with that. So I really would say one. If you're day trading and scalping or any kind of moves like that, I think it's better to focus on one asset because you won't overtrade. You learn to build a narrative and kind of have like that detailed expectation of what you want at a price, and you can build an if-then strategy. Like, well, if this happens and I get my entry model, then I'll enter. Well, if it doesn't happen, then I will sit. You know what I mean? And it starts to build that kind of disciplined character as a trader that you're going to need to be successful. So I would recommend one when you're starting. Market maker sell model 15-minute Bitcoin. Yeah, actually, that is pretty clean, to be honest. I definitely can see it. I would have wanted this consolidation. I'm not sure if you're referring to this, which I'm guessing you are, but I would have wanted this to be a little bit cleaner, but I definitely can see what you're pointing at. And that would be more of the daily bias. If we took this and we start to see that move down, you might finally get these lows, which would be ideal. But I really wanted to see this imbalance, man. So I don't think this is where we're going to just hold at, but we'll see. So he said, what's the most optimal time to trade crypto? I recommend New York session. Asian session has some good trades sometimes too, but I think New York is more consistent. What's ES doing? That would have been a nice little move. I don't think it would have hit a target, the little paper trade. So that's why I don't like trading during lunch. You'll have some annoying shit like that happen. But I'm giving small gains, but nothing really worthwhile. Who knows? It could reverse and end this imbalance again. Yeah, I won't force anything today. Specifically, what I'm looking for, New York session is from 7 to some people say 4, but 7 to 5 p.m. I think is what ICT goes by. You're talking about the kill zone, and it's 7 to 9, and then London close is 10 to 11. But I would mainly focus on like same with indices. And if you're just trading Bitcoin, I would really make sure to watch S&P and NQ because Bitcoin's kind of like their sidekick at this point. Like you're not going to get what you want out of Bitcoin unless it agrees with indices. It's just not happening. But on that note, somebody said, where do I trade stocks? I trade it on my funded account. I use MetaTrader, but You can trade on Thinkorswim. You can trade on Webull. There's a lot of different, even Robinhood, but I wouldn't recommend Robinhood. Thinkorswim is probably the best other than MetaTrader. But yeah. Well, on that note, guys, I'm going to hop off here. Won't be back on YouTube till Monday. Everybody that's in the private server will have a class tomorrow. If you want to sign up for a free trial so you can be a part of the class tomorrow, the link is in the description of this video. Just make sure you use the code Casper, all caps, so you can get a free trial. And if you have any questions, you guys know how to get at me. I will see you guys tomorrow. Peace.